5 stock you should think to buy in 2023. The Nasdaq 100 tends to bounce back strongly in the year after a loss. The Nasdaq 100 technology index plunged into bear territory during 2022 and in the year with a decline of 33%. When the teach investors may be pleased to learn that 2023 could be a booming year for the index if history is any good. That's because since its inception in 1985, the Nasdaq 100 has only fallen 2 years in a row on one oscillation, the period between 2000 and 2002, otherwise known as the dot-com teach bust. Historically, in the first positive year following a loss, the Nasdaq 100 returned between 37% and 64%, or an average of 51 across the 4 instances in 1991, 2003, and 2009, and 2019. To be clear, investors will have to grapple with a few hurdles in 2023 before they see long-lasting gains, like elevated inflation and rising interest rates. But some of those challenges have begun to resolve, and the Nasdaq 100 is already up 4.9% in January, suggesting a great start. If the TICH index does have a blockbuster year as a historic suggests, here are 5 stocks that stand to benefit from the recovery. 1. Microsoft. Microsoft's MSFT 0.13% is one of the safest bets of Wall Street and gets praise from analysts and retired investors alike. That's because the company has a track record of success spanning more than 3 decades and has trashed the return of the broader stock market since its initial public offering (IPO) in 1986. Microsoft has billions of customers using its legacy software products like the Windows operating system and the Office 365 document suite, but its business is now more diverse than ever. It has a fast-growing cloud service segment led by its Azure platform, which is ranked in the top 2 in the industry. It also holds a leadership position in gaming through its Xbox brand, which could expand further if the company's $69 billion acquisition of development studio Activision Blizzard passes regulatory scrutiny. Overall, Microsoft could deliver a whopping $212 billion in revenue during fiscal 2023 and in June 13, which is a 7.1% increase over fiscal 2022. But this company is always thinking about the future, so keep an eye on its planning $10 billion equity purchase of OpenAI, the developer of ChatGPT. 2. Apple. Apple AAPL 1.01% makes some of the most popular consumer electronics in the world, and like Microsoft, is a phenomenal long-term success story loved by a lottery list of investing gains that include Warren Buffett. Apple is coming off another successful product launch in September, where it unveiled its flagship range of iPhone 14 smartphone, plus next generation accessories like the Watch Ultra and AirPods wireless headphones. These add-ons to the iPhone ecosystem have become multi-billionaire dollars revenue generator on their own, and now rumors are swirling that Apple is about to tackle the next frontier, virtual augmented reality, later this year. Despite the company having a thought 2022 as customer pulled back on their spending, it still managed to deliver record high revenue of $394 billion for the fiscal year ended September 24. Its service segment, which include disc subscription like Apple Music, Apple News, and iCloud, was the star growth driver once again, with Apple stock down 25% from its all-time high. This is a rare opportunity to buy America's largest company by market cap at a discount. 3. Scalar, cybersecurity powerhouse. Scalar's ZS 2.52%. Stock has collapsed by 17% since hitting its all-time height in November 2021, but its business has a spectacular 2022. That's because corporate executive named cyber risk the top threat to their revenue last year in a survey conducted by PwC, and thus continue to invest heavily in protection. Scalar is the developer of Zero Trust technology, which is designed to protect network by treating all accessors as hostile. When an employee tries to enter their company network, Scalar's Zero Trust Exchange verifies it identified by going beyond login, credential, and analyzing the user's location, device, and role within the organization to make sure that the user is supposed to be there. In fiscal 2022 and July 31, Scalar delivered $1.09 billion in revenue, which was a 62% jump year over year. It was the fastest rate of growth since the company went public in 2019. Even in the face of a weak economy, the company expects to follow up the result with more than $1.52 billion in revenue in fiscal 2023. Scalar stock might be trading down steeply, but the strength of its business suggests it could be one of the first to soar higher if the Nasdaq 100 recovers. 4. NVIDIA 2.35%. is one of the world's leading production of advanced semiconductors, computer chips. Some of the incredible progress being made in areas like artificial intelligence (AI) wouldn't be possible without the hardware that NVIDIA developed, and is often referred to as a pioneer of such technologies as a result. 5. Amazon AMZN 2.99% is another company suffering from a drop in customer spending because e-commerce still makes up over 18% of its total revenue. But Amazon is said to emerge as much leaner business from this difficult economic period, as it has shuttered some of its loss, making startup projects and trimmed its workforce. The company has diverse revenue stream thought and its Amazon Web Service cloud platform is at the top of a $1.3 trillion industry by 2013, according to Grandview Research. Plus, it has a booming advertising business that sells spot on its flagship website Amazon.com, which attracts 2.7 billion visitors a month. But opportunities in that area could extend through its prime streaming service and its growing portfolio of live sports rights. When Amazon reports in 2022 full-year results later this month, the company is expected to have generated over $510 billion in revenue. It would be the first year it has passed the $500 billion milestone. Much like Microsoft and Apple, Amazon had delivered outsized return for investors compared to the broader stock market since it went public in 1997. There is no reason to think it will stop over the long term, and with the stock down 48% from its all-time height, this is a rare opportunity to buy at the steep discount.